Hello, this is Miles Tullo bringing you the JD Power Financial Services Intelligence Update for December 2024. This month, I'm excited to talk with Craig Martin about JD Power's newest research on affluent consumers in financial services. Craig is the architect behind this brand new research and has joined me today to share some insights. Welcome, Craig.
Thanks, Miles. Looking forward to the discussion.
Great. Me too, Craig. I know we get a lot of questions from our clients about affluent consumers. Can you explain what you've created in response to those requests?
Yeah, what we've done is we've taken a lot of our existing research that covers our banking studies, our wealth management investment studies, and combined those two data sets and some other studies that we conduct to really take a broader look at what we defined as affluent clients. So we're talking to over 100,000 consumers annually, and we've drilled down in on folks based on their affluence and the amount of household and assets that they have to try to understand what are some of the key differences between different groups, how that varies based on demographic factors like age, and really thinking about what's really critically important. Oftentimes JD Power tends to focus on customer satisfaction at its core, but we know that in the affluent space, people are looking to build these long-term relationships, really focus on trust. And so we've really dug in deeply to go and understand the mind of that consumer, what's unique and different about them, what's important if you want to succeed with those groups going forward, and really gotten into the weeds, so to speak, on what's critical from a behavioral and strategy standpoint.
Okay, we get it. So can you tell us a bit more about the conversations you've had with our clients so far and any common themes that are coming up?
Yeah, I think everyone's got a unique kind of strategy and focus, but there's some really critical important things. One is everyone's talking about affluent clients. Everyone is looking for a way to target those groups to drive organic growth. These folks are highly attractive clients, and many people have some portion of the relationship, but what they're trying to do is figure out how to grow those relationships. I mean, the competitive landscape's been changing really rapidly. I mean, and so what we find is that everyone's trying to reset, as we go into that kind of next phase or evolution. We've seen a lot of change on the way service is provided. You've probably heard lots of talk about these generational wealth transfers and all the baby boomers and all these other things that are going on that are really critical challenges that are set to kind of change the landscape. So everyone is really trying to understand, where do they stand today? What do they need to do to succeed in the future? And again, how will that look differently, from what they were doing 20, 10, 5 years ago? It's, technology is bringing new capabilities. How do you make sure that you've got a strategy that will work today and in the future? And that's really been the critical challenge that most people are trying to figure out, is what technology do they need? What products do they need? What are the right clients to target? Where's the real opportunity for them, and how are they going to succeed?
Thank you. And so what stands out most about the results then?
I think one of the most important things that we found is that there's a real challenge in that, existing older consumers, baby boomers and the like, are pretty well established in their wealth relationships and their banking relationships. So one of the things we're looking at is who are truly the key opportunities. A lot of that comes from the younger consumers. So as you're thinking about building those relationships, what is it going to take? Whether you're a wealth firm who's trying to kind of build a new pipeline for the future, or you're a bank client who wants to drive kind of future success, how do you develop those relationships with the folks who are going to be most amenable, who need the services, need the capabilities, and are really in the market? And trying to break away in a long established client is going to be pretty difficult, but understanding what the risks and opportunities are is really important. So I think that's one of the critical insights. And I guess the simple answer, the truth is, trust is a really critical piece. So we spend a lot of time digging into this concept of trust. It's not just as a monolith of trust as a concept, but really thinking about what are the different ways you think about trust. How does that differ based on a banking relationship, a wealth relationship? And then what do you have to do to actually deliver the different types of trust that is necessary to be able to really win that business and create those truly loyal customers, not just satisfied, but not necessarily advocates or highly loyal.
Got it. So let me just double click on that then real quickly. Do affluent consumers trust their banks and their wealth management providers equally, or is there a difference in the level of trust that we're seeing?
Well, there's definitely a pretty key level of difference there, and that we see a couple of points I would make there. One is about 70% of affluent clients we classify as high trust. So about just under a third are actually what we call low trust. And there's a massive difference when people are high trust and low trust. Now, in the wealth world, we've really double clicked on this and we call it our advisor continuum. So we've been talking about more transactional advice and guidance that moves up into goals based and then comprehensive. And comprehensive is kind of that ideal, what many would refer to as holistic, relationships. Banks are trying to deliver that as well. Now, when we look at the numbers, the wealth firms tend to succeed more in delivering that high trust. Banks are more challenged. The other thing we found is that what trust looks like for a bank is very different than you would think about from a wealth relationship. And again, makes sense. Oftentimes that bank relationship is very focused on what we call more transactional things, very technical. It's products, it's basic services, it's keep my information secure, allow me to transfer money, do those basic day-to-day blocking and tackling things. But how do you differentiate? Why should I give you kind of the broader relationship? It takes more than just being technically sound. It takes something more advanced on a trust standpoint. So that was a really interesting thing. And definitely not everyone's created equally, even when you start looking at whether it's national banks, regional banks, mid-sized banks versus different types of wealth players. Everyone's kind of achieving different levels of trust. And so understanding what's driving that, what are kind of the strengths and weaknesses of the different models and why is really important.
So for those who are watching, how would you describe and contemplating this research as something that might be of interest to them? Who do you think would benefit most from this research?
Great question. Obviously, I'd like to say everybody, but but I think what's really important is those who are in the process of updating their strategy and really thinking about where do they fit today. Those who are looking to grow organically and trying to realign resources and capabilities to make sure they're maximizing their investment. What we find is that one of the big challenges that just about every firm has is you don't have unlimited resources. And whether it's technology, it's people, all these different resources you're trying to bring to bear, you have to apply them very strategically. And a lot of firms are thinking about, hey, obviously AI and all these new technologies are out there. How do I apply technology? What do I need to do with people? You can't forget the people. What's critical there? And what are kind of the low-hanging fruit? Where are those key opportunities? So again, I would say it's people who are really in that strategy realignment, or as they're looking to grow, where do they invest next? Where do they prioritize? And how do they tackle the market are all going to benefit from having access to this information and competitive intelligence.
Well, Craig, thank you for producing this exciting new research, and thanks for spending a moment with us today to share some early insights from the research. We appreciate you being here.
My pleasure. Thanks, Miles. Appreciate the discussion.
Excellent. Well, the J.D. Power Affluent Clients Trend Report is available now. You can contact the J.D. Power representative to purchase it, or you can view a primer via the link at the bottom of this post. I'll be back in January to discuss findings from our auto finance digital experience research, which benchmarks the experiences of customers of the 27 largest automotive financing websites and mobile apps in the US. This should be a good conversation with lots of insights, as it's the inaugural year for brand rankings, so we'll certainly have a lot to talk about. We'll see you in January.